on YouTube.
It's just you and me on right now. Live stream and record your gaming.
Are you guys seeing it
What?
on YouTube? All right, so yeah. Hey YouTube, can you? This is William from Bearable Traders. Can you hear me? And Brian.
Just looks like you and me on the moderator room. I don't know.
No, Brian, we're live on YouTube. People can definitely hear us now.
Okay, cool.
Yeah.
Sounds good.
Good morning, everyone. Thank you. No, it's kind of early on a Saturday.
Okay.
It's Pacific time for Brian and I. It's 8:30 a.m., but we're still happy to be here.
Okay. It's weird. Ryan says I'm on our channel and there's no notification. But you're getting feedback from YouTube?
Yeah, there's 25 people right now. We got Nancy from
Okay.
France.
Oh, wow.
Yeah.
Bonjour.
Do you speak a little or fluently, Brian?
Oui, j'ai parlé en français un petit peu, and maybe Nancy knows what I said. But that's sort of, but I don't have sort of conversational French. I know how to ask to where the bathroom is, and I can order in a restaurant, but I can't carry on a conversation with any degree of understanding. So there you go. So, all right.
Yeah, so we'll get started here. Thank you everyone for coming. Yeah, Brian.
I was just going to say, let's maybe I should I was jump on the YouTube channel too, and yeah, Ryan's not sure what the link is. Doesn't show live on the channel, so I'm not sure what. I'm just texting with him on WhatsApp. So I don't know. Maybe you can post the link or email the link out to the BBT team.
Right, well,
but let's not. Yeah, but let's get going here.
Yeah, we got 35 people in here.
Okay.
Yeah. So I hear ya.
Are you gonna email the link out?
Yeah, let me do that right now.
Okay.
Give me a sec here, and I will get that going.
Sure. Yep. Just hang on a second, guys. We'll get going here shortly.
And Ryan says we're good now. He sees it, but I'll still email the
link
okay.
Out. That'd be good.
All right, I just emailed it, Brian.
Okay, cool.
Cool. All right, so he'll get that in a sec. So yeah, good morning, everyone. Thank you for joining us, Brian. We got 50 people now.
Okay, sweet.
Yeah, you want to get us started, Brian? Any intro?
Yeah, I don't. I mean, this is the third. This is the third Ask Me Anything live YouTube cast that we've done, and we're glad everyone's. Seems to be a few people that are interested. We've got, like I said, we got over 50 people in the room now, and we're last couple have been pretty well received, and we're looking forward to, we're looking forward to answering your questions. So that's about it right now. Day off, no trading.
Yeah, great. And sorry if it's a little choppy or fuzzy, everyone. We will get it fixed for next time. This is my first time, so apology in the beginning for that. All right, we'll get started with some questions. This is coming from Benja. With an all-time new
Yep.
high, when do you know where to set your limit and your stop at?
Um, well, if you're, I guess the question or maybe relates to whether if you're long a stock and the stock's breaking out and it's making new highs and there's really no levels to trade against. Um, I'm assuming it's for me it's a little bit challenging to take a trade on a new high unless you get a pullback. You don't want to chase a stock into a new high, and quite often what happens when stocks do break out to sort of brand new highs, they often check back. So they'll quite often they'll check back to where they broke out from. You give them a couple days, and I'm not, who knows why. I mean, I guess it's just profit taking or what have you. But people see the new high and they've been in for a long time, and maybe they're taking some money off the table. So the stock does does often pull back, and that's actually usually a pretty good place to enter if the stock does check back, and then you keep a tight stop once it checks back to close to where it broke out. Like a couple percent lower. Don't let it, because we did have that instance here with SPY where it actually broke out, and it was one other index did it too. I think it was the Qs. Broke out to a new high and then pulled back, and it actually wasn't a check back. It was a false breakout. So you got to be careful about that. But yeah, I would. If you're trading on a new, if you're already in, you just hang on, and you're set your stop just below where it broke out from. If you're not long and it's and it's breaking out, you wait for a pullback to get in. So I could say that's in in short, that's what you need to do. And the reverse for breaking down, for stocks breaking to a new low. You can chase it, because stocks breaking to a new low often just keep going lower. So you don't get that same effect when it breaks out to a new high. So what else? Like the only other thing I can mention is, like, for example, like a head and shoulders pattern is a good pattern to trade when a stock loses the neckline and breaks lower. It's usually a good short, and it's a pretty reliable pattern. William, you want to add anything to that? I kind of chatted that one up a lot.
Yeah, no, you got that for the most part. So, also from a psychological perspective, I know that in my head, it's extremely difficult for me to think a stock can continue to go past the all-time high, but it always seems to do that. I think it can't go any higher, so I'm kind of short biased, wrongly so. And it always continues to go higher because there is the momentum of the all-time high of all these buyers. And oftentimes, as Brian said, it busts through and people start to chase. Then people start to take profit. So it goes back to the breakout point. And then if it's a true breakout, it'll hold support there, which is the entry that I want. And then it will make the move up. That's oftentimes how those work, whether it's all-time high or all-time low, because people are going to take profit at the breakout point after it breaks out, but the move is still going to happen. So,
Yeah.
so when I try to play that, I'll wait for the pullback to minimize my stop, get near the breakout point, and then let the move materialize.
Yeah. I think we pretty much killed that one.
Yeah. All right.
So
Yeah. Okay.
yeah,
This comes
go ahead.
from.
I think Merrick has. Yeah.
Yeah. You
Mark?
got. How did you guys get into trading, Brian?
You. Well, for me, I mean, if you read my book, I've always been interested in trading. I think, and I know Merrick has. I'm pretty sure he has read my book, so chatted a few times. But yeah, I've just even when a really young age. I mean, probably dating most of you here, but I was trading when you had to call a broker to buy a stock. I wouldn't say I was trading. I was just at that point you're more investing. But yeah, I still have this. The very first share that I bought was in a company called Bell Bell Telephone, which was a Canadian telephone company. They hardwired lines to your house, and you had the rotary dial. If you guys know what that is, on a phone, you've probably seen it in the movies. But yeah, no, I still have the those shares today, and they're like, I've got about 40 or 50 of
Dang.
shares now of the one that I just started with, just because I just asked them to keep reintroducing dividends. I actually remember getting dividend checks for like 2 cents. It was kind of funny when I think about it in retrospect. But that's why I've always been interested in it. And then over the years, I met some brokers. I took the Canadian securities course because it's just always been something that I've been interested in. So, William, what about what's your story?
Yeah, for me in the beginning, I got suckered in with low floats. Like the easy way to make money. There's
Oh,
so much marketing out there. Make $1,000 a day. Follow these three simple things. Make $10,000 your first week. Things like that, and it suckered me in, Brian. It really did. That was the
hmm,
very beginning. It just caught my interest. I got suckered into the scheme, and I joined a couple of various chat rooms in the beginning, including Variable Traders and some other, before I went out on my own to lose a lot of money. But it all started with the scheming of low floats, I must say. Yeah.
yeah. No, it's been the death of a lot of people that look at a stock chart and think, oh, this has got to be an easy way to make money, when you're looking at like what was the hot one this week, ETOC, ETLK. I mean, yeah, it looks, you can look at a chart like that and look at it in retrospect and think I should have been able to make a killing on that, but
Yeah.
it's it's not that easy. And you make a few bucks a couple times, and then the next time you trade one, you lose a couple of thousand or 2,000, and yeah, so that's a painful lesson for a lot of people.
Yeah, Brian, and
um,
when I started trading, it was when JNUG and gold was just soaring, and the 5 minute chart
oh
was
yeah,
just like it never pulled back, and I was like, "Is this how trading is? Just things never pull back. Just you buy when it's green." And that
yeah.
was at that time with the low floats and the 3 times leveraged ETFs. I don't touch those things anymore because they got the best of me.
Well, you've got to be strategic with them for sure. And sometimes I think I remember that period, um, which kind of feeds into the next question. Our biggest loss and biggest gain on one day. I mean, I've probably I would say it's probably biggest loss would be maybe a couple $1,000. Biggest gain, I think the biggest gains I had was we were it was 2018. We were trading the what do you call it, the blockchain and the Bitcoin, this whole hot sector mania craze. And I know I took a huge position on, I think it was Riot, and I think I made like I think it was like $8,000 or $9,000 on a swing trade, just by holding it overnight. And I had quite a few thousand shares, and it was up like $3 or $3 at the open. So yeah, that was probably one of my better days for sure. But you don't get those all the time, unfortunately.
No, you don't, man. But we can get our biggest losers all the time. That's easier to do.
Yeah.
My biggest loser in a single day is 5,000, and in 2 days it was 8,000, and in a week it was about 18,000 that I lost one week. And that was really bad, guys. That was really bad. And one of my biggest winners was in my first week of trading. Those low floats and ETFs. I made $2,000 in a single trade in about 5 minutes or something. Um, and that was the worst thing that
Yeah.
could have happened to me. I share that story a lot. I thought trading was so easy in the beginning because I made 2,000 in 5 minutes, and then I went on to lose all that and much more. But the biggest gain in a single day was about 5,000.
Yeah.
Yeah.
But yeah, I think when I think back out of my biggest losses, I'm it was actually a stock. It was actually BlackBerry. or was it RIM? Yeah, yeah, RIM or BlackBerry. I mean, yeah, and I thought I would be smart. This is when I, learned. This is when I developed. When I was developing my different rules, and this rule I have about not holding a stock over through an earnings, and I thought I was being pretty smart by holding RIM. I think it was, yeah, it was RIM through earnings, and all the earnings and all the prognosticators are saying, oh, it was going to be another great quarter, and yeah, I had 2,000 shares or something like that, thinking I was going to be up like $5, and I made some negative comments, guidance, and that was, yeah, and that was it. Lost like $3-4. So yeah, it was down. That's when I figured, that's not worth holding stocks, no matter what they're saying. It's not worth holding stocks through earnings.
Yeah, and that goes into
Yeah.
a next question. Is it possible to trade for a living? Is it possible? Yes. Andrew does it. We all do it. Brian does it. I have my own separate job. A lot of traders do that. But is it also extremely difficult? Yes. Will everyone be able to trade for a living? No. Will many people fail? Yes. But Brian, you succeeded. You are
Yeah.
proof, correct?
Well, not necessarily, because I traded while I had a corporate job, and I still do consulting that's not
Okay.
related to stock trading. I do it partly because I still enjoy consulting and recycling and recycling field, and that's what I did in my corporate life, and so I would say if you have something, you know, trading for a living is probably something that you really need to slowly transition into. Keep your day job. I mean, for a lot of us, you can trade in the morning and then go to work and have a regular job, just like William. Just like myself, I did that for many years. Made it a little easier because I was on the West Coast, so I just get up early, trade for a half an hour, and then go off to, have breakfast and then go off to work. I could do that. It's a little more difficult, I guess, for some people like that are on the East Coast, where you probably have to be at your job at 9:30 when the market opens. But yeah, I would say if you're going to do that, it's just a very slow transition. Because if you just quit your job and just start trading for a living, you're putting yourself under a lot of stress and pressure. You might make decisions that aren't smart for your trading because you're more emotional. You're thinking you got to pay the bills and you got to be profitable, and so yeah, it's going to change the way your whole thought process is with trading. And the one thing about trading, and everybody says this, it's 90% head game, and you've got to stay cool. You got to stay collected. You got to stay unemotional, and just trade with your plan and keep your risk reward. So, and it's hard to do that when you're in the back of your mind, you're thinking you got to make X amount of dollars this week to make the rent. That's not a great place to be in. You don't need that extra pressure.
Yep. And just remember, everyone, Andrew talks about it. He just recently quit his other job. He was doing multiple things, even though he's killing it every day. He knows about the pressure, the stress that can happen when you try to do it for a full time. So he had his separate consulting job as well. And a lot of people do, because it is the smart way to do it. Like Brian said, slowly transition. All right, Brian, let's move on. When you first started out, were
Yep.
you also swinging for the fences, not taking those 20 or 30 cents via $1 or $2? Brian, I got the first answer. For me, I had no concept of what that even meant. Like, I had no idea how to manage my risk, no idea how to, like, if a winner was going to be small or big. I just kind of bought when I had no idea. So yes, I think I was naturally swinging for the fences, risking thousands of dollars on every trade in the beginning, and it was a disaster. So I was swinging for the fences, not even knowing what I was doing.
Um, yeah, I think when you start out, you're nervous especially when you go live. You're nervous when you're in a trade, and you probably want to take profits too early. I think that's if there was a common complaint for almost every trader, it'd be that you're taking profits too early, and I'm guilty of that as well. Um, I did have actually a pretty good trade on Friday when I went short NTNX, and I actually was in that for like a couple hours. um, and I just kept checking it, and I just kept moving the stop down. Eventually I got stopped out when it was under 27.60 or 70. I can't remember, but yeah, I held on. But that's, I really I really have to work on that, and that's a constant battle for me, is not to take profits too early. Often I don't get that second leg down on these shorts, because they start to pull back, and that's when I usually get out, and usually there's at least one more leg down. So um, anyway, yeah, it's I would say it's a very common battle that most traders fight, if you want to call it that.
Come on, Brian. Who called out that NTNX trade on Friday? Because I remember it.
Oh, that was you.
That was
That
me.
was you, dude.
I know. I know.
And that was nice. And I got into that, and part one of the things you can do is partial out, and everybody knows that. But take some profits and then just trail a stop, and that's basically what I did. But that was William. William got me gave me that idea, and I started looking. And I thought, yeah, you know what? And it was a nice trade, because it just kept leaking right to the last hour or so, and then it started to pop back up again.
Yeah,
but great trade.
Yeah, and so quickly, I'm going to share what exactly happened so people who are not part of our room can understand. Brian was jumping on the mic on Friday, like he always does, to share what he sees in any of his live trades. I saw something in NTNX, even though I was done trading, so I jumped on and I started talking about it. And at first, Brian said, he doesn't like to short things that are strong and that are very extended. But then we started to talk about the technical analysis and talked it through, and then he took the short on it. And that's the type of thing we do in our room all the time. We give each other feedback. We give each other ideas with the other moderators, with Andrew, and with other members. And if you're not a member, we got some codes here. If you're watching this, we have YT20 to get a 20% off, and pre-market 24. You can go into our website and type those codes in, and you could try the pre-market 24. That's $24 for 2-week access to our room, just to try it out. There's no strings attached, no contracts, just to see if you like it. And that, so you guys, if you're interested, please go to the website and try us out. All right, the next one, Brian.
Yeah.
This was. Oh yeah.
Yep.
Yeah.
No, I was just going to say, this was a really beautiful call, because William was watching the 5 and the 15, and he was watching the multiple time frames, and it just started to roll over, and you can see it. Look at the chart; it's from about 12:45 to about 2:30 in the afternoon. It just kept going down. So that was, and I just followed it right down to about 26.70.
Nice.
That's where I think I got.
Well, Brian, this
stopped
question.
Out, but in my. Yeah, I see that. Do you prefer a fixed target, something like 1-to-1, or trailing stop, with or without partials? Well, I usually do like partials, because number one, if you're profitable on a trade, it doesn't hurt to take 20-25% off at a sort of 1-to-1. And that way you can kind of feel confident. It gives you a little bit of confidence. It gives you confidence that you're going to probably be profitable on the trade. Takes a little bit of the pressure off. Like I said, trading is as much a mind game as anything, so it takes that little bit of pressure off. But ultimately, you want to be taking trades that are giving you a 2-to-1 reward to risk or better. Otherwise, you're probably not going to be successful as a trader if you're typically taking 1-to-1 risk to rewards. So it doesn't hurt to take a little bit off, and then it really just depends on your style. I mean, and it also depends a little bit on the price action. Certainly, when you watch Norm and Carlos do the pre-market analysis, and we all do the same thing. We look at levels where stocks are going to have natural resistance and support, and quite often they respect those. It's just amazing how, if like a stock's green, it's selling off. It's amazing how it'll go back to the previous market close and bounce off that. Just just and looking back further into other levels where it's found, stocks found resistance or support. So yeah, it's a little bit of a combination of both. And if you watch Andrew, if you watch him trade, like he'll partial out, and keep partialing. Like for example, if there's he's short a stock, if he'll partial out all the way down, but he'll always hang on to a few shares, a couple hundred shares or 100 shares, because he'll be waiting for a specific level, like maybe it was a previous low from 2 months ago or 4 months ago, but he'll always hold on to see if that stock goes to that level. So it's kind of a bit of a combination of everything. So do you want to add anything to that, William?
No, man. Well, you're good, and we got a lot of questions, so we're gonna try to speed it up just a bit.
Yep.
Maybe we'll alternate a little bit.
Okay.
I'll read the questions for us.
Yeah, sure. Go ahead.
You want to. Um,
Nope. Do the next one. Yep.
Perfect. Hi guys, wondering if you actually place stop loss orders or keep mental notes when to exit. For me, if I'm getting in a trade where my stop is very close to my entry, I'm mentally gonna I have a mental stop and I will stop out immediately when I need to. If my stop is extended from my entry, or if the price has moved away from my stop, then I personally put the stop in the market, a hard stop, and wait for it to get hit or wait for my profit targets to get hit.
Yeah.
You got anything, Brian?
That's a good. I mean, no, I think if you're in a day trade and you're in front of your screen, I mean, I think you have to keep in mind where your stop is, and as it moves in your favor, you have to be, I think you have to be moving your stop up mentally. Mm-hmm. The only time I actually will use a hard stop, like William was saying, where you just actually enter a stop, is if I'm in a trade and I get up and go for breakfast, like the NTNX one. I kept going off and doing stuff and just coming back to my computer and resetting my stop. Or you can use a trailing stop, or you can I guess you can use a range order, or one order cancels the other, whatever you want to call it. But yeah, but generally speaking, I keep my stops live in my head, unless I'm going to be away. And you never want to let a trade just trade without some kind of controls, because that's you could come back and you could be down significantly. So all right, if you're already in a stock and as you're in it, it reaches a new high, how do you know where to set it as it keeps going up, to not lose the profits drastically? Well, if a stock's going up and if it's making new highs for the day, for example, again, you can take a partial, and then you can just trail the rest. The only thing you have to be cognizant of is stocks never go straight up; they always do a bit of a pullback, and if you set a trailing stop, you actually might get tagged on a flag. So yeah, it's a. And I also look at, the other thing I do look at is I look at how far a stock is extended from the VWAP. I mean, if a stock's getting really extended from a VWAP, that's probably a good indication that you're going to have a significant pullback. Maybe, and again, it may be just a pullback, but always a good time when you're thinking, Jesus, is getting really extended. It can't just keep going. But so anyway, we don't want to add to that.
Yeah, I would just add really quickly, when I think about that, there's maybe one of three things that could happen. It could be the breakout and run. It could be a fake out, breakout, and break out, and then come back and be a reversal. Or it can break out and then chop around at that level for a period of time. And that's why we partial, because we don't know what's going to happen. If it fits within our risk to reward plan, you definitely can partial right there, and then wait for something else to lock in some of those profits. All right, so the next question, which relates to the previous one, Brian. How do you calculate share size based on risk during the open when stocks are moving so quick? So I personally trade much smaller share size in the first 1 to 5 minutes, including pre-market. I'll even go smaller because those moves are so violent, and I can, if I'm on the wrong side of a violent spread with a violent gap against me, what I thought I was risking, a certain fixed risk, like however many dollars or how many cents per share, it could be double, triple, quadruple, or maybe even 5 or 10 times what I'm thinking. So I go much, much smaller, 50% to 25% sometimes in the open. What about you, Brian?
Um, yeah, I think I make a comment about risk and share size because they're kind of a little bit separate. How much risk you're taking at the open is really it's a function of what kind of trading style you have, what kind of setups you look for. I mean, I think I usually take bigger sizes on the opens because I find you get the best moves on the open. And I've said this numerous times when Andrew leaves and I come in the room at 10:15 or 10:30, is that I'm really reducing my share size because I know from experience that things are going to get a little choppy, and quite often my trades don't work out as well. My percentage of success is lower as we get into that 10:15, 10:30 time frame. It's not quite long enough for stocks to have sort of settled into trends, and it's past the point where that first half hour where stocks really make their big moves. If you look at big moves on stocks, they pretty much, not always, but I would say 80% of them end around the first half hour, and then they get choppy. So do I take I take my larger share sizes in that first sort of half hour, and how much and the size I take, really that's more of a function of your level of experience, the size of your not your portfolio, but how much money you have to trade with, and how comfortable you feel. I mean, like I don't personally, I don't feel as I don't take share sizes that Andrew takes, but that's his style, and that's my style. I probably take half to a quarter of what Andrew takes. While Andrew's getting in at 5,000 shares or 6,000 shares, I'm taking two. So, and it's just me. There isn't a right or wrong answer. That's just that's where I feel comfortable, and he's comfortable taking larger sizes, and that's it's all about what you're comfortable with.
Yep.
So
All right.
anyway, and that gives you another indication. Both William and I are different. He takes smaller sizes. I take bigger ones. It's all about developing your own trading style.
Definitely. Yeah, different trading
Yep.
styles, not better or worse. It's just different for the person. Um,
Yep.
Brian, do we know anything about CFDs? And I do not. I don't know anything about CFDs except I've specifically stayed away from them.
Yeah, I don't know that much about them, and I don't trade them.
Yep.
There's Nicolay. He asked. He's so short biased, and it really hurts me. I think, yeah, people. I know there's yeah, people. I think, I don't know why. What if it's human nature or something? But I find that I have to fight that too. I'm always, and that's why I kind of, again, I develop all these rules after years of experience. That's why I don't like to short stocks that are strong, because I'll look at a strong stock and I'll think, okay, it's gone way too far. It's gotten crazy. It's the valuation is like nuts. So I would, in the old days, I would short it, and then of course, you get a pullback and you think, okay, it's working out great, and then next thing they're just buying it right back up again. So, yeah, I don't know. I think it is human nature for whatever reason, and don't ask me to explain it, but I have that tendency too, and that's why I have that rule that I really don't like to short, strong stocks unless it's later in the day and I'm seeing some indication on a chart, like we talked about NTNX, that a stock is actually going to start to roll over. You just wait for the market to tell you that. Don't try to second guess it. I guess that's the difference.
Mm-hmm.
So yeah. Anyway, CFDs. No, I don't. Sorry, I can't really comment on that because I don't trade them. Don't know them.
No problem. Yeah, me neither. And then someone's asking for the best. Where is that? The
Router.
Yeah, the best router. If Ryan
Fuse.
is I don't know if you know, Brian, but if Ryan is listening, he might be able to give a good answer for that. I don't know. I don't have a good answer.
Yeah, I don't know about. Not sure about that.
Okay.
You could just Google it, and unless you're talking about route to an exchange.
Oh, I thought it meant
I don't
router,
know.
but he'll clarify later.
Okay.
But yeah,
Yeah.
Ryan, if
Let's
Ryan's
let's
listening,
say
he might
router.
have a good answer. All right. How can you use a stop
Mm,
range order through hotkeys? Uh, Ooh, do you do that,
well,
Brian?
that's a good. No, I don't. We do. Don't we have some modern? We have IB support, don't we? Not IB. We have DOS support.
Mm-hmm.
We have a DOS support person that probably can answer that question.
Yes, we
But I
do.
don't. Yes, but I don't know if you can actually set that up.
I'm fairly
I
sure
can't
that
see
you
it.
can in DOS through hotkeys.
Okay.
I personally don't do it. I think some of the other moderators do it, and we definitely have. First of all, DOS is awesome because you can always, if you're using DOS or any platform, you can email them and they will answer questions that you can't figure out. We also have on our team a specialized DOS person that answers all of these easy, medium, and complicated questions for all of our members. So if we get asked this question in the room, we send them to our DOS support that's specifically with BBT, and they will answer those questions.
I'm wondering if we can get somebody to do a. Is there an existing video, YouTube video or instructional video on actually setting up range orders? It might be something we should ask our assistant or the support person to make a YouTube video on how to do that, how to set up range orders, if you can do it through how to do it through a hotkey, that kind of thing, right?
Yeah, great, Brian. We got our support in the room right now. Ryan answered the question about the router, and now Robert H. the Great has sent a link for the hotkey. So there you go.
Oh, awesome,
That's the
great.
hotkey link for someone.
Thank thank you, Robert and Ryan.
Yep.
Or two R's. Actually, yeah, two R's. Do you know any good prop trading firms? Honestly, I don't. I can't say that I do.
Nope, me neither,
I'm a
Fabio.
Canadian guy, so I just and I'm out here on the West Coast, and we're just isolated from all the prop trading guys. A related question to entries: how do you time that on a short time frame? With the markets choppy many times and then false breakout patterns. Well, I find, Merrick, that the false breakouts tend to happen a little bit later. Although with the opening range breakouts, you can get, lately, yeah, things have been pretty choppy in the first couple minutes. So I think the best way to do it is if you're looking for an opening range breakout, try to sit on your hands for at least, Andrew was saying. Andrew was originally trying to not trade for 5 minutes. I usually wait for at least 2 minutes, 1 or 2 minutes, just unless there's some real clear pattern emerging. But I'm finding you're right. I'm finding that, like for example, Roku at the open has been really choppy. It'll jump up a buck and then it'll sell off and then it'll be down a buck and a half, and then eventually a pattern emerges where the buyers, either the buyers or sellers, are taking control. In this case, I think with Roku, it's usually been the sellers at the open this week. But yeah, I think the best strategy is to just try to wait it out a couple minutes and just see where when the sellers or the buyers really emerges being the ones that are in control. The only other trade that I've been doing fairly common over the last little while is just is taking these gaps down and then waiting for a pop up at the open, and then and in some cases I'll even just set a price at or near the VWAP for it to pop up and short it on the pop, and then usually they start to sell off. So that's been a strategy I've used, and you can use it on stocks that are gapping up. They'll often pull back a little bit at the open, so almost like a bit of a fallen angel type thing. And then you can get in there, and then the pattern will reemerge where the buyers take control again. So that's my answer. William, you want to add anything to that?
No, I mean, for the sake of time, we'll move on because you covered it great. Thank you. Daniel asks, William, do you watch markets all day or just the morning? Also, do you keep multiple time frame charts for all stocks on your watch or just you are currently in? If not, what is your main time frame? All right, I have 3 monitors and I watch 4 stocks at a time. With 2 of the stocks, I have 6 time frames: 1, 2, 5, 15, 60 daily. And on the other 2 stocks, I only have 5 time frames, and I switch between the 60 and the daily. But I have the 1, 2, 5, 15, and then I have the SPY on one of them as well in the corner of one of my monitors. And do I watch the markets all day? Like this again, this is a great question. It's not better or worse. It's just different. My eyes would hurt so bad from watching, and my brain would it would it would break down if I watched these tickers and focused on the computer all day. But a lot of people do. You know, they can do it. I can't. I try to get in and out within the first 30 minutes to 90 minutes. And then I stop and I go about the rest of my day doing various things. But again, other people do, and I missed out on some really great trades by not staying. But it's just not my style. You have anything on that, Brian?
No, I think that's like I said, I depending on what my day looks like, I just I'm kind of in and out. Sometimes I'll join later. Sometimes if I've got other stuff to do, I can't. So, but yeah, I think again, it's we're trying to help people learn how to trade, and a large part of that is learning, what style works for you, and everybody's probably gonna have a slightly different answer. And people, we're trying to we're all here supporting each other, trying to, and at the same time you're trying to sort out what style is going to work best for you, what trading style is going to work best for you. So maybe it's just trading that first half hour and then walking away for the rest of the day. Maybe you sit in front of your screen all day because you enjoy it, and like I said, it's just a matter of how you want to trade.
Mm-hmm.
Okay.
Let me. There's a couple. Yeah, Tim Sykes was definitely someone I followed in the beginning. I don't anymore, but he's great for some people. And Merrick had a follow-up question. Wow, I think this is about the big losses, and maybe you can comment on that quickly also, Brian.
Yeah.
But for me, after I blew up my first account of 25,000, I quit trading and thought like this isn't for me. I can't do it. And I was away for like 3 to 6 months. And then it was just a mental game. It had I mean, first of all, I didn't know what I was doing back then, and I didn't even know how mentally it was destroying me. But I did come back after I stayed away from the market. I calmed down. I took my head out of the game. And then when I entered back in, it was in such a better mindset. And I still blew up my second account. But at that point, I was actually learning and progressing that I didn't quit at that point. Because I realized, okay, I'm on the path of understanding what I need to do here. So it did take a while, and I did quit. I came back, and then I haven't quit since. Do you have anything on that,
Yeah.
Brad, after your big losses?
No, I don't think, I think that I think you either decide to quit, or you think, okay, what did I learn from this? What lessons did I learn? And again, that's where, I kind of developed my own little rules for things, and I try to stick with them. And even that can be difficult sometimes when you get FOMO and all the rest of that. But, yeah, I think after a big loss, you just kind of have to step back and say, okay, what did I learn? And, do I want to continue going forward, and how do I avoid having that happen again? And usually it's either you're not honoring your stops, or it's something like that. So again, just taking a step back and rethinking things. Mm-hmm. What are your thoughts on how gaining consistency in mid floats to consistency in penny stock trading? I don't know. I think we try to stay away from penny stocks, particularly ones that are under $1. And I think you can make money in those. I think you have to be a little bit patient, but I've made some really good money in penny stocks. But it was only through kind of knowing people and knowing what was going on. I wouldn't call it inside information, but just knowing, it's just knowing that, they've got these things in the pipeline, and, if you search the internet, you'd know that that's what's going on, but you just happen to know people, and they've got, and they're just saying, hey, you should look at this. So, not necessarily knowing inside information, but, penny stocks are challenging. You can buy something for, 30 cents, and, and sell it for $1, and that's great. But I don't know. I just find consistency, predictability of price moves with mid caps and are a little bit better than trying to figure out what a penny stock's doing, because there's so much stuff going on, so much manipulation that can happen. Gap scanning software, effective or hype? Well, we use the gappers in the morning. We on Trade Ideas. I'm not sure what LL is. LL's a person, but I'm not really sure. I mean, that's how we find our stocks in the morning. I'm not sure if I'm missing part of that question or not, but I think they're good. I mean, IB Brokers has their own little gappers watch list, most actives.
Yeah, LL, because I'm not quite sure either. If you're still here, ask that question at the bottom, and we'll try to get to it if we can. All right, Andres CV asks, do you use orders with profit exits? I would like to trade momentum movements in the open, but the volatility makes it difficult to me to see the exit target. Do you use orders with profit targets? Do you know what he's asking, Brian?
Yeah, I think so. I mean, we have profit targets when Carlos and Norm are doing the pre-market open. Mm-hmm. We look at the stocks that are on the gappers watch list. We try to pick out levels where stocks will naturally have, if it's gapping up, stocks will naturally have a level that there'll be a resistance, maybe a prior high, what have you. And so, you can use profit, you can use those levels as targets, but then you can also take partials on the way up. I mean, if you're getting a big move and it's getting really extended from the VWAP, and you're already, well into the 2-to-1 risk to reward, you take a bit off, and you look for, wait for the pullbacks and just make sure that they are pullbacks and not reversals. So I would say that's sort of how you can set your targets based on. Again, check out Norm and Carlos in the pre-market. They do a great job of going through stocks and finding levels.
Yeah, and I think I understand the question also. So I use limit orders. I send my limit partial orders to the market, if that's what you're asking also, Andre. And there's so many times where something will move so quickly, or I'll turn my head and I'll see the spike, but I missed it, and I won't get filled. But when I put in those profit targets, those profit exits, and wait for it to get filled, I'll sometimes turn back and be like, oh wow, I got filled, and then it dumped against me. So I do like to use orders that I send to the market to scale out at times. Let's see, where's the next question? What Williams?
Hussein's asking.
Who? Sorry, go on.
Yeah, Hussein is asking if anybody's using Alliance. I would post that in the forum if you're not getting an answer here. Mm-hmm. Some talk about NTNX,
Yeah, the next one is, are you a trend or counter trend trader? I think I can answer this with certainty. We are neither counter trend or trend traders. We just try to read the market, right? We try to read the stock and wait to see what it tells us, whether it's a reversal, whether it's to continue with the trend, whether it's a counter trend. That's what we're trying to do. We are not biased with only longs or shorts, right, Brian, in our room?
That's right.
Yeah.
I mean, I'll take a opening range breakup. I do like opening range breakdowns a little bit better. I mean, again, I just kind of don't want to, at the risk of repeating myself here. It's my style, and it doesn't have to be your style or anybody else's. But I do look for, at the open, I'll look for. I like the gappers down, and then shorting them when they pop up. And the other trades I look for is I look for the double bottoms later, but those happen later. half hour, 45 minutes into the trading session, I'll look for double bottoms. And we also look for those pendant patterns. Once we get into, an hour into the day, we look for stocks that are really narrowing down into a narrow trading range, and we watch for a break either to the upside or downside. So, yeah, I don't really say I'm biased one way or another. I look for those patterns, and that's what I trade.
Mm-hmm.
So,
Yep. And Brian, I got this next one, and then you can take the next one because I
yep,
got really good answer here. From Brad Landers,
yep.
how do you all find the balance to refrain from being overconfident, trading uncontrollably, and not giving into euphoria? It's hard to not be overconfident when one is on a win streak. All right, Brad. Well, I have the sad but realistic truth here. I've had win streaks, green days of 10 days, 15 days, and 18 days in a row. And every time I did that, the next red day, I gave back all of my profits on the entire win streak. And I don't ever want to hide things. This is the reality of what happens. I was on a win streak in the wrong way for the wrong reasons, and exactly what you said. I became overconfident, and then I decided I had to keep the win streak, so I would do things to break my rules, and then I gave into the euphoria when within that win streak I would kill it and make way more money than I thought I was going to make. So I just had to keep increasing and increasing and increase it, and it finally ended all 3 times with giving all the money back. And it wasn't until I talked with other peers in trading, specifically Carlos and Robert, to realize, for me, Green Day streak is the last thing I ever care about again. It only leads to disaster. It doesn't mean anything about smart trading. It makes me overconfident. It makes me euphoric. I don't want that feeling. So that's how I stay away from it. I don't care about green win day streaks anymore. I care about smart trades. Every single time a smart trade or a streak of smart trades. Some winners, some losers, but all that I feel good about.
Yeah, I don't know how, if I can really add to that. I think, William summed it up pretty well. I mean, we all suffer from that. I mean, you're not, if you're feeling that, you're just know you're not alone. We all get, again, it's trading is 90% mind game, and yeah, we're just human. It's just human nature. You get a winning streak going. I mean, same thing with a gambler going into a casino. Get a winning streak going, and you start to feel invincible until you until you find out you're not. So and you can really, all the winnings you take on 2 or 3 days prior can disappear in one day.
Yep.
Just because, and I always watch for that too. It's happened to me so many times. It's like, I'm starting to feel good, and all of a sudden, I'm thinking, the little person in the back of my mind or on my shoulders, going, "Oh, this is when, this is get ready to lose because it's coming." so I try to keep yourself in check, and just recognizing, Brad, that this is something that the traders constantly fight with. I think you're halfway there. So you just never forget that there's a you're just one bad win. You're just one bad day away from losing everything you made. So, or giving back a lot of what you made. So.
All right, Brian, we've got about 5 to 10 minutes left, but I know we can stay a few minutes extra. But
Yep.
we'll try to both speed this up so we get through as many as we can.
Yeah. Yeah, and we'll try to limit the number of more questions so that we can get through this. And wrap it up here. So, all right, go ahead.
All right, so I'll read through the questions, okay, and I'll do that for us. So Harry asked, I think you need quite a bit of money to trade. Like, wait, is this? No, that wasn't a question. All right, here we go. My question for someone who's not tech savvy: can they find success in day trading? This is from Robinson. He's a new member in our room. I grew up on a farm. I was never tech savvy. I had horses, cows, dogs, rabbits, and then my current work has nothing to do with technology. And I think it took me a little bit longer of a learning curve, but yes, you can still overcome it. You just have to ask the right questions to the right people and get them answered, and you can definitely do it.
Yeah, there's some comments about Warrior Trading and Ross and trading. I mean, I remember Andrew actually was in their room when he was first sort of starting out and learning. And and he got me to check them out, and yeah, Ross has a style. I mean, I think he can, he makes money, but I think a lot of their business, kind of, you've got a lot of people that are trying to copy him. That's basically what they're doing, and copying traders, trying to follow traders into trades. I mean, a lot of times it'll work, but quite often, sometimes won't, and that's where um, that's where, again, gets back to more our philosophy, is we're trying to train you and teach you how to be traders and why you're entering a trade, and not just blindly following somebody else who's doing the trading. So we're not here to talk bad about anybody else. Any other trading rooms. I mean, it's their approach to things, but we like to try to teach people why they're getting into a trade and making their own decisions in the long run. And part of it's following somebody else and understanding what they're doing, and that's how you learn. So anyway,
And I
so I
just
know
want
that
to
I saw a few comments.
I want to quickly add to that. We never want to talk anything bad about other trading rooms. All these trading rooms are great. They have something to offer for them. It's just whether it fits your style or not. I have been members of other trading rooms, and I think they're great. They just weren't a perfect fit for me. So I just want to make sure everyone's aware of it.
Yeah.
There's a lot of options out there.
Yep. Yep.
Okay, what do you guys think about the whole macro environment right now with all these trade wars? Brian, this is a question for you, but let's
Yeah.
limit it. A short answer for us.
Yeah.
'Cause
Yeah.
I know you can talk about
Okay.
this.
Short
You're so
answer.
knowledgeable.
Oh yeah, no, and I talk about it in my videos, my weekly recaps and midweek recaps. But I mean, it's crazy right now. I mean, there's just, you just never know when something's going to come out that's, like this whole Mexico tariff thing. I mean, that was just a complete blindside for the markets and just pretty much everybody. So yeah, we're in an environment right now where it's I'm having to pick my swing trades pretty carefully, because you just don't know when you're going to get another, news feed that's going to sideswipe things. So, could get another, news release on Sunday saying, they're near a trade deal with China and the U.S. So I'll just end by saying, I think we're on shaky ground here. Things seem to be slowing down. We've been a really long at the tooth bull market and bull economy, and you just don't keep going like this forever without some kind of a pullback or recession. So I think we're, with all the trade war stuff and everything, unless something turns around, I think we're probably going to be in for a slowing economy and choppy markets. So that's what I think right now.
And Brian, as a quick follow-up, one of the other future questions is, how do you know when to change a day trade to a swing trader? And you're the swing trader here, so you want to take that one also?
Sure. The one thing you want to be careful about is not turning a day trade into a swing trade, unless, well, I first off, I'll just say I keep my swing trading and my day trading accounts separate. So generally speaking, I don't, my swing trades don't usually turn into day trades, or vice versa. My day trades don't usually turn into swing trades because I just try to close out my day trading account as cash at the end of the day. How do I know whether to turn a day trade into a swing trade? I did that this week with Beyond Meat. Really liked the way it was closing out on. I had traded it during the day, but I really liked the way it closed out. I think it was on Wednesday. It really went strong into the close, and it was popping back. And so I just thought, you know what, I'm gonna take this long. Yeah, it was Wednesday. It closed out on the high. It closed strong. So I just I actually went into my swing trading account and took some. I think I had about 600 or 700 shares. I should have taken more, but that's easy to say looking at the chart. But yeah, anyway, that's. I mean, you can take a swing trade on a, and that was just a quick, quick decision on my part. But I like the way it traded and like the hot sector thing. So anyway, that's a long answer, but.
Yeah, and so guys, the time is up, but I'm fine staying a couple more minutes. Are you, Brian? Just a few more to try to get through these?
Yeah, let's try to get through the questions.
All right.
We'll keep it going as
Okay.
long as people are still in the room.
So we'll try to limit
So,
our answers, Brian, to 10 to 15 seconds if possible, okay?
yeah,
Cool.
yeah,
And so
all right,
just remember, guys, we do these. We're trying to do these at least every couple weeks or a month, and we offer a lot of different education and resources. So if you want to check us out, go to our website, and we have a 20% discount for lifetime membership, YT20 as the coupon code. And if you just want to, again, try us out, pre-market 24 for the introductory 2 weeks. It's only $24 to see what we have to offer on a daily basis. See Andrew trade live, see Brian talk about swing trading, see us review trades, see us talk about psychology, and all of the different things we do throughout the day. So yeah, all right. So we're gonna try to whip through these now, Brian. I will read them
sure.
for us.
Yep.
How long you have been training on simulator before you went live? I never went on simulator before I went live. The first day I traded, it was live. What about you, Brian?
I've never used a simulator. Didn't have that when I started trading, but I would say, just this is a question that keeps coming up with people, and we keep telling people that, there isn't like a standard answer, like you should be on 3 months. Some people are on a couple months, some people stay on 6 months. It really depends on how, if you're feeling confident to go live. And when you do go live, you scale back your size, go small with your orders, because the other feedback we get from a lot of people is going live really is different than trading in a simulator. There's real emotion, real money involved, and so you really need to start small, to try to do everything you can to minimize that emotion. So I would say, yeah, a couple months probably for most people.
Mm.
But again, it's very dependent on the person
Yep. And
and how confident you feel to go live.
yeah, and I would say I definitely did it wrong. I wish I could have been in a simulator, but I didn't. If I could go back in time, I would change that. So, next question from one Mirren. Hey, William, how long did it take for you to be profitable? Well, honestly, over 2 years. And if I could take out the biggest 5 Hulk days where I blew up and lost way too much, it would have been a different story. But because I didn't understand proper risk management, and even recently I've still succumbed to that, which really hurts your trading. That's the biggest issue there. And so someone then asks, what's the best advice you can give when start trading? Risk management. That's it. That's going to kick you out of the game, or it's going to let you continue to learn. It is risk management. Learn about risk management, not even psychology, not the technical skills, just managing your risk so you have time to, again, learn technical, learn psychology, learn the setups, learn everything, but don't lose too much money too fast. You got anything, Brian?
Nope. Yeah, I think got it.
Okay. Hey, okay, I'm scrolling down. SMB author. Brian, could you give us a little about what it was like trading during market meltdowns? I am constantly worried that something like this is on the horizon. Thanks. Oh, that's a loaded
Okay, it's
question, man.
yeah, and market meltdowns, I would say, are harder. They're a little bit harder to trade than sort of this stair step up. Stair steps ups are always easier. When the markets are dropping, and they say that the one of the you can get the hugest bear market rally in a downtrending market, because people get short, and then they get squeezed on the way down. You get this giant bounce, and the next day it's going. Volatility basically just goes up when the markets are going down, and so it's harder to make trades, and stay in them, because you get shaken out on some wild swings. But yeah, I mean, you would think it would be a lot easier you can make a huge amount of money in a short period of time on a real sell-off like we had in 2008, going back that far. But yeah, it does tend to be a little bit harder, and sometimes again, it's a matter of style, but sometimes when you get into bit of a market meltdown, sometimes it's just, better to step to the sideline and just stay in cash. Realizing that you're gonna miss out on some good short plays, and you're gonna miss out on some long plays too, or just significantly reduce the size of your trades. That way, you kind of take a little bit of the emotion, losses and gains out. So, but yeah, I'm looking for this meltdown, and it's been sort of I've had it over the last week, but I'm really nervous about taking a short trade, because any tweet anytime could send this market up like 500 points, and being short on that would be wouldn't be fun. So it is definitely a little harder to trade markets that are heading south.
Do you ever trade after hours or after earnings report? From LW Tucci, Brian.
I don't. I don't generally trade, especially earnings especially on earnings. If stock's reporting after hours, I won't go near that, because it's just, I don't know. People are on the calls, they're listening. Every little word is getting traded, and you just can't tell where a stock's going. It could start out higher, and then the CEO could come on and say, well, next year we're not seeing such great visibility on, and then the stock will drop like $1.50 or $3 in a matter of like a heartbeat. So yeah, I don't trade that. Now, what I did do with Beyond Meat on my trade on Wednesday, I did actually, I think I got in around 96, and I put in an order at I just thought, okay, let's go outrageous. I put an order like 102 or something like that, and I got for the pre-market, and I got filled. But that was, I just kind of figured it was going to gap up in the pre-market, and I take some, and that was only my partial. So I took partial of it off, and it actually, I wake up in the morning and I got a fill. So, and I was happy with $6 on a partial.
All right.
So that would be the rare occasion I'd actually do pre-market. Yep, go ahead.
All right, so we got a hard cutoff in 6 minutes at 9:45, 12:45 Eastern.
Okay.
Okay. So ever work for a prop firm? I have not. Have you?
No.
All right. Do you or is it normal for traders to have good success in short or long trade and not so much in the other? I have definitely heard that before. I have never had that problem myself, though, but I know some traders do. Brian?
No, I don't. I don't. Yeah, same answer.
Okay. Do you put automatic stop loss in case of an ORB sometimes turns into an engulfing pattern in the first 10-minute market? It's pretty volatile, and engulfing comes with a lot of loss. This is a question from Amir. Whether it's an automatic stop loss or a mental stop loss, regardless of the setup, yeah, you've got to have a stop loss in there in case it goes against you with something like an engulfing pattern.
Yeah, I wouldn't be using a hard stop on in an opening, in the first 30 minutes. You're pretty much on the edge of your seat watching your price action. I'd only set a hard stop when later in the day, if I was leaving to go somewhere or something like that.
You see, and
or I had multiple trades on.
Yeah, that's a great answer, because I do use hard stops in the open. Brian doesn't. I don't think one is better than the worst. There's probably pros and cons of both, but I do that, and Brian doesn't. And then Brian, this is for you from Kobina. How much weight do you assign fundamental analysis to your day and swing trading? Do you read analysis reports? If yes, which ones do you consider? Ooh, it's got to be a short one, Brian. 4 minutes.
Yeah. Okay. I don't do a lot of. If you read my book, I talk a little bit about fundamentals, but I really don't. The only thing that I really do with fundamentals is I guess if you want to call the hot sector trade a fundamental, then I would say that's sort of most of my assessment. I just sort of let price action tell me what everybody else is reading and listening and seeing in a stock. For the most part, I would say it's 99%, unless you're considering hot sector trades a fundamental. I guess it is a fundamental. It's not really a technical. So I guess that's the main fundamental thing I use. And right now, meatless burger seems to be the hot sector.
Mm-hmm. All right, Murak asked,
That's it.
do you think using the DOS Trader Pro built-in screen recorder? I didn't even know they did that, and I use OBS and Camtasia to record my screen. And yes, I record my screen. I listen to myself talk to try to. So then I make sure to verbalize my thoughts as I'm trading so that when I look back at the trade and listen to it, I can tell what exactly I was thinking and what I was doing. And that helped me so much because before I'd be like, what in the world am I doing here? But once I had my thought process, it started to make sense and see how ridiculous it was or how smart it was after the fact. Um, okay. How do you set a stop when trading the first candle or 1 minute orb when market opens and the movement is so erratic in both directions? Brian, that's for you, man.
Um, how do you set a stop? Um, well, it's a bit of, again, I just wait for things to settle down a little bit, and then yeah, I mean, that's basically what I do. I just wait for things to settle down a little bit, and then you can set, like when I'm doing like on these gap downs when they pop up. I mean, when you're playing the pop up, then you can set your stop just a little bit above the view app. When you're doing gap down or gap ups, you can it's yeah. It is a little bit hard because you don't have a lot of levels to trade against at the very open. But like I said, when you play a pop up or a pop down or a drop down on the gap up and downs, you can kind of visualize where you want to get out, and that's kind of the way I manage it. So.
All right. Black NSB. No, unfortunately, I did not paper trade before losing the 25,000, and I wish I had. And then Hans Braun. Brian trades the open, yes, and so do I. All right, Brian. Unfortunately, you and I could stay here for a long time, but we gotta shut this off now. So, for everyone here, thank you so much. Quick question though. Do you guys like these AMAs? We've done a couple of them, and let us know in the comments if you like them, what you would like to see differently, what you think is really good about them, so we can continue to add value to anyone who is a part of our community or not a part of our community. So please give feedback on that. And Brian, how can members or non-members, can they sign up for your swing trading newsletter? Because you definitely have a lot of interest from these people about that.
I think I think the swing trading letter is free right now. I don't think that you just need to go to the Bear Bull website, and you go to the swing trading page, which there is a swing trading page there. If you go to the bottom of the page, you'll find a place to enter your email address, and yeah, you can just sign up. I don't think I'm pretty sure we're not charging for that right now, so it's a free service at this point.
Cool. And last time, I just want to do this. My least favorite thing is to do any sort of hard sell, but I will tell you, this is how I originally got into Bear Bull Traders. Before I was on the team, before I really knew what I was doing, I tried out their introductory week or two, whatever that was in the past, because again, it's no contract, no strings attached, just to see. And I did that to various rooms because I wanted to compare rooms and find out. So right now, if you do go to our website, you can type in pre-market 24 for the introductory 2 weeks. It's only $24. And for lifetime members, it's such a great deal, and we're giving 20% off. It's a one-time fee, 20% off. You can look at all of our resources. You can participate every single day. You can quit whenever you want to, and you can always come back at that point because you're a lifetime member. So please note you've got options for that. Any final last words, Brian? We are officially done.
Okay. Not really. Thanks everybody for joining us this morning. I hope people have benefited from this, and we all enjoy helping others find their trading, their trading niche. So again, thanks for joining us this morning, and hopefully we'll see all of you in the room on Monday morning.
Yeah, heck yeah. Thanks, everyone. And again, please continue to comment if you're watching this after the fact about what you like about these AMAs, what we could improve upon, what we can focus on. And we'll definitely listen to all the feedback we get. So thank you all very much and have a great weekend. And we will see you Monday in our room.